What a fucking day. What an absolutely perfect day today was. Holy shit. SPY ripping to the upside. 470, 76 high of day today. Holy fucking shit. Bullish. This looks amazing. Absolutely fucking perfect. 470, 76 high of day today. $10 away from all-time highs on S&P 500. Less than $10 actually. $9 and change. So I mentioned in my video Monday that we could, don't hold me to it, but we could definitely see 470 this week. That was very fast. 2 days later, here we are. Now, I mentioned multiple times when we broke the resistance at 460 here, this green line running straight across, that would be confirmation of a bullish market. And when we did break above 460, here we are now at 470. Very, very solid 3 days here. Like I said, it's air. It's air up here. Where we're sitting right now, there is 9 days of price action. There's 9 days of price action above where we are currently sitting on S&P 500. We could see all-time highs this week. Now, I'm not saying for sure that we're seeing all-time highs this week, but if we don't see it this week, we more than likely will be seeing it next week. We are right there. We are sitting at 470, $9 away from all-time highs right now, with literal air as resistance overhead. And on top of that, breaking 460 is a very, very big deal. Now, I mentioned when we did see 470 that it was possible to pull back and test 460, the breakout, the break of 460, hitting our head at 470 now. I mentioned when we saw that, it was possible to pull back to 460 to retest. Now, that does still stand as an option. I just don't think it's likely. I don't think we're going to be revisiting 460 for a while. Now, we could pull back from here and test 460. That would be no problem. We're just testing a breakout. I'm just leaning more on the side of this is going to continue to all-time highs and further before we actually pull back to test 460. Now, like I previously mentioned, this is just zoomed in all the way on the top here, what I was showing on the last slide. So this green box here is the only price action that is above us right now where we're sitting at 470. And by the way, I didn't even move this line. This line at 470 from my last video, I did not move it. Literally to the penny is where high of day today was. The line at 460 I removed as we just pummeled through that. But like I said, this is the only price action overhead right now on SPY. 9 daily candles of price action you're looking at here. A couple of them are wicks. Really, what we're looking at now, there is very minor resistance at 474. And then after that, it's just all-time highs. And we're still looking for a gap up on SPY. So, you know, if we were to see that gap up, I would probably lean that would be a Friday or Monday type deal. So maybe tomorrow we get some kind of a doji here, inside candle, or we just continue to the upside. I definitely wouldn't be mad to see that. But point being here is SPY is going to be seeing new all-time highs very possibly within 1 week. We're right there. There's nothing above us. It's air. We break 470 and it is air up here. So yeah, if we do break 470 tomorrow, if we break the high of day today that we saw, if we break this level 470.76 and start climbing up towards 474, you could potentially expect to find a resistance there. And if we don't break this level tomorrow, like I said, potentially a doji here or an inside candle. But I am expecting all-time highs in the extremely near future on S&P 500. And that applies to Dow Jones, NASDAQ, all of it. The market is bullish. In case anybody missed the memo, we are in a fucking bull market right now. Looks great. Breakout after breakout, descending broadening wedge, breakout. Ascending triangle, breakout. 460, breakout. Uptrending since November 2022. Higher highs and higher lows. Another new 52-week high today. 470.76 on SPY. This shit looks amazing. Now, let's get into AMC. And we did form a new all-time low today. Now, that could probably be argued as there is a wick down to 650 on Webull. I fucking hate Webull, but it's there. So you could argue that today was a new all-time low for AMC. You could argue it was a double bottom. Either way, it does not matter. And I'm going to get into the TA now. It does not matter. Found a very nice bounce off that with SPY today. I don't expect to revisit that area again or form a new all-time low. Do not see that happening at all. So really quickly, the macro of AMC from IPO, your January, June squeeze V-shape macro break, your January, June squeeze V-shape macro break, and then the downtrend, green, red, blue, flat portion, yada, yada, all the way down and being pinched here by your macro resistance, rejecting it 3 times, and then on the 4th try, you break through it, and it's a vertical line into your squeeze. That's what we're looking for now. I've covered this macro a million different times. And I'm gonna start zooming in now into the downtrend itself, into the flat portion, and then we're gonna be taking a look at our macro resistance. But I've tried showing this a million different ways, showing it different ways. So like this, like I showed with the flat portion, removing all of the noise from the chart. I'm gonna do this with the downtrend now, removing all of the noise from the chart. The bull phases. So we're just looking at the downtrend of the previous macro, where you get your macro break, this gap down right here. That is the start of the downtrend versus the current over here, your macro break gap down. Now you get this little pattern here, right where you get your macro break that you see here, the sideways chop, and then it falls off, and then you begin the downtrend. So this is the first bottom of the previous macro, climbing back up to the trend. Obviously, this took much longer to play out, much less volume, so it took a lot longer to play out. But coming down and then bouncing up, this is where you find your macro resistance trend. It's a very, very important line on AMC, and we are meeting it within a few days. So come down, bounce up. This is your first touch on the trend. Then you come down again, bounce up, second touch on the trend. And then over here, same thing. Come down, bounce up, first touch on the trend, come down, bounce up, second touch on the trend. From there, you continue downwards. You do not touch the trend again until you get to the flat portion. And same thing over here. Coming down, and then at the flat portion, you get these 3 peaks that you see here, which pokes above the 200 EMA. It does not touch the trend. And then you get the W move in the middle. And this is where you get that fake out move. This is your third touch on the trend. So the third touch right here, the fake out of the resistance, and our third touch right here, the fake out of the resistance. From there, you come down again, you get your second and third bottom, second and third bottom. Third bottom is the all-time low landmark. You uptrend, you break the macro resistance, and it's a vertical line into your squeeze on the 4th touch. Again, the flat portion took roughly 1 year to play out in the previous macro. 2020 to 2021, and in the current macro it's the same story, starting roughly 2023 and will be concluding 2024. So that is the downtrend with all the noise removed. The 200 EMA is here in yellow. All of the crosses of the 200 EMA are exactly the same on both sides, and the rejections off of the resistance, the fake out, is the same on both sides. Now I mentioned yesterday or Monday, AMC's macro and the downtrend is just January 15th breaking to the downside over and over and over again. In other words, it's lower highs and lower lows over and over and over again. Lower highs, lower lows, all the way until the bottom. Your reversal point, your third bottom all-time low. That is the lowest point that you make, and from that point, you uptrend into a straight line once you break the resistance. Current cycle, it's the exact same story. January 15th, breaking to the downside over and over and over again. Lower highs, lower lows, over and over and over again until your reversal point, which is where we are right now. Now, we did make a new all-time low today. It can be argued because we did see a 650 candle on Webull, even though, I talk shit about Webull all the time. I said if it doesn't show up on TradingView, it didn't happen. So this could be argued either way. But it doesn't really matter, is the point, because, and I'll get into that. But zooming in even more now into the flat portion, and this is just looking at the final part of the macro, and all the noise is removed again. So your first bottom here, chop, 3 peaks poking above the 200 EMA, not touching the resistance. Your first bottom, chop, gap up, 3 peaks poking above the 200 EMA, not touching the resistance. The W move, which breaks you out of the resistance, the W move, which breaks you out of the resistance, your fake out there, and then dropping down for your second and third bottom all-time low landmark is where we are now. Again, 1 year to play out here. All the touches are the same. The cross of the 200 EMA is the same. This looks great. Now, I want to talk about this because I'm trying to get everyone to understand this. This macro trend line that we have here, our halt line, is very, very important. This is our macro resistance on AMC. So obviously we have our halts in January and June while we were peaking, but then coming down here, there's your macro break. You get that little sideways pattern dropping into the downtrend, and then lower highs and lower lows rejecting this resistance and halting, not only rejecting it, but halting off of it every time we've touched it. So in March, in August, and then all the way down here, not touching the resistance again until July. We got that move after hours, again halting to come even lower. And this is where we are now. And you could really see the price action here speaks for itself. I wonder why we are trading in such a tight range here on a daily basis for the last 4 months. It's because there's no room. There's nowhere to go here. It's like I said, the options here are very, very simple. We're going to be meeting this macro trend line, the macro resistance, Monday. Next Monday, we meet this trend line. The options are very, very simple here. We either reject off of it or we break it. And if we reject off of it, we're going to zero. There is no case for $4. There is no case on AMC for $4. And here's just zooming in even more now. You could look at the range on the candles here. And let me get back to it. Look at the range on the candles all throughout AMC's macro. Even while we're in the downtrend, yes, boring price action, lower highs, lower lows, but at least there's some movement on these candles. Look at, it's just flat. We have completely flatlined, bar coding on no volume here, trading dead fucking sideways for the past 4 months because we are being pinched down into our macro resistance. And like I just said, there is no case for $4. It's an absolute fucking melon theory. We're not going to $4. If we do go to $4, we're going to zero. Like I said, we're meeting this trend line very, very soon. We have a few more daily candles that can fit in here. And if we reject this trend, if we break to the downside again here, there is no coming down to $4. Then what? Uptrend into it and then break it? It doesn't make sense. If we reject off of this, we're going to zero. And we're not rejecting off of it, so we're going to be breaking this to the upside and going to $1,400. Another point here, the macro resistance intersects zero January 17th. So 1 month from now, our macro resistance trend will be intersecting zero. So we are either squeezing or we're going to zero. And if you could make a case for AMC going to zero with all of the good news that we have going on fundamentally, coming off of the best quarterly earnings that we have seen in AMC history, Q3, everything we have going for us, Beyonce, Taylor Swift, Amazon, the popcorn, the candy, this, that, sports, Kroger, Publix, the writer strike's over, I think. I don't even know. I think it's over. There is no case for AMC going to zero here. This is just a shitty macro. That's the best way to put it. Whoever decided, let's all buy this stock, this macro, it's such a shitty macro. AMC, I'm on the flip end of that coin. Let me just get where I'm going. This macro sucks. It's horrible. downtrend 99% of the time. The bear cycle of AMC is 99% of the time you're just downtrending, forming lower highs and lower lows. But when you get into the bull phase of AMC, it's a vertical line. That's the great thing about this play, and GameStop as well. The bull phases of the meme stocks, AMC and GameStop, are vertical lines to the upside. And this next wave that we're about to see is going to be ridiculous price targets on these tickers. But that's really the point here is, we are, like I said, we're Chop City. We are dead fucking flat, barcoding every single day. Yes, we made a new low here, 650. It's pretty much a quadruple bottom. It's pretty much a quadruple bottom here. And we bounced off today, closed 680. It looks great. Now, we have two more candles that can realistically fit under this resistance, and that's going to be tomorrow and Friday. So I would not expect anything crazy tomorrow and Friday intraday. After hours Friday, however, very possibly we can see some action. And what I mean by that, whichever slide I'm trying to get to here, this one probably works. So, I mean, you could really see how flat we are here. And we are, like I said, we're moving to the right every day. We are getting closer and closer to this trend line, our macro resistance, our halt line. But what I was getting at is this pattern that played out, that started in 2023, the beginning of the flat portion. So your first bottom, the tri-peak, your second bottom, that's what we're playing out down here. I'm not including that chart in this video. I threw it in Discord earlier today, but we've gone through all of this. This move here would have been this move right here in the middle, coming down to your second bottom, which is a lower low, which is what we got over here. And this wick down here would have been today's price action. This is where I have us tracking this. Is this wick down right here? You bounce up from it flat, and this was that Friday after hours. So potentially Friday after hours we could see some action. If not, it's more than likely going to be next week. But the point here being that this macro resistance trend on AMC is a vertical line. It's dropping lower and lower every single day. It's heading for zero very, very soon, and we are getting very, very close to meeting it again. I believe the top resistance on Friday's close is $8.30. By next Friday, the top resistance of this trend line is $6.30. So this kind of feels like a now thing. So that's pretty much all I got for this video. What a fucking day for SPY. What a fucking day. Less than $10 away from all-time highs. Less than $10 away. We're there. There's really nothing else to say. I could sit here and chart the micro, and we could theorize different perspectives on the micro. It doesn't really matter. What matters is we're meeting this trend line within 2 or 3 candles here. And that's it. I mean, you can draw this line. I'll just say this now. You can draw this line one other way. And where am I going here? You can draw this line to these 2 wicks, above these 2 wicks here, but that takes it off of the top wicks of these candles. So I'm leaning more going from this top wick to this top wick and just running it straight down. And that's obviously where we got that breakout move, showing the volatility behind this trend. It's possible that I would have to pull this line up so it's hitting these 2 wicks here. If I did have to do that, that pushes us out like a week and a half. Is pretty much the point. We're there. This is January 2024, always has been. It can definitely go in December, is pretty much the point here. So, with that being said, that's everything for today's video. I'll probably be making another video on Friday, if not live after hours. So, with that being said, catch you guys in the next one.